Hello guys, welcome back to the channel. So I want to show you my swing trading strategy. I've covered already my sort of intraday strategy. So now I want to take this a bit further and show you some longer term things. So this is a way to hold trades for 3, 4, 5 days, maybe a week or a little bit longer if necessary. So this is a great example. This is a trade I sent out this morning to my Discord channel or Discord members, and it's on Euro Swiss. So I want to break down the entry and what I was thinking about this trade, and then I will go back and show you some examples on sort of replay mode and some other approaches. So this was taken on the 4 hours on Euro Swiss. So let's just zoom out a little bit actually. So first of all, when swing trading, you need, well, actually in trading in general, you should be doing some form of top-down analysis. You should be looking at, let's say, this one. So this is the monthly chart. I mainly use the monthly chart just to get key levels. It's not a case of I use the monthly to actually place trades. It's just so I can quickly look and say, okay, I'm not buying into resistance on the monthly chart. I'm not selling into support on a monthly chart because obviously that would be kind of crazy. Then we've got the daily time frame. So I use the daily for the trend. Am I trading in the right direction? So we can see here we had a huge push to the upside. You can see it's very sort of typical moves to the upside, nothing too crazy. We had higher highs, higher lows being formed, very clear. We had the moving averages that were bullish. Nothing hard to understand there. But what we have now seen is a shift to the downside. Didn't break out. We haven't managed to create a higher high. We have now broken this previous low here. And it's seeming like we're now in a downtrend. We've also got the bearish moving averages here. You can see the 200 is now above the 50, indicating that the market is heading to the downside. So we've got the trend on the daily. So now we do the analysis on the H4 or the 4 hours. So if we zoom out a little bit, you can see we've got our supports and resistances marked up. We've got a resistance here that has been, we broke above, we came back down, retested again as resistance and continued to the downside. We've got 2 more supports at these levels here. And now if we zoom in, it gets a little bit more interesting. We did have a market gap here. Now the market gaps in Forex are actually quite rare. You may see market gaps are commonly formed during market close and then market open. So it's when something happens that affects price during the market close and orders are put in over the weekend, and on market open, that's obviously when price digests those orders and it can gap. So that's what happened here during this weekend. I won't go into it too much, don't worry, I won't bore you because obviously I don't know when you're watching this video. What happened here was there was a problem with the French government and the parliament was dissolved. So that's basically caused some pressure on the euro, and over the weekend we saw price gap. It gapped on market open. So what happened? We formed a support here. We formed this low. Market used this as support up until market close. The market closed and then opened again with this gap. And then we came back up, and you may notice if you find a gap on market open, you will often see it get filled relatively quickly. It normally doesn't take very long. However, this one did take quite a while to get filled, and this was obviously because it was an economic reason, and it was quite a serious reason, really. It could have had some detrimental effects, but luckily not too bad. So yeah, price came back up and filled this gap. But what we also see now is, again, I've repeated this over and over, but one of my favorite things is a break and retest. So we've broken down, we broke past the support, we've come back up, we've filled the gap, and we are retesting this support. So now I'm looking for price to head lower. However, that's not all there is. There is more to this. So if I just delete that, you can see we've got the Fibonacci. So if we draw our fib from the high, which is here, down to these lows, the 50% level, which is the 0.5, and the 618 level, line up perfectly with the support, or the previous support, now resistance, or the market gap, whatever you want to say. Let me just show you the settings real quick. So we've got 0, we've got 0.5, we've got 0.618, we've got 1, and we've got negative 618. The level in between the 618 and the 0.5 is called the golden zone. And you can Google this. It's not, this isn't something I've created. It's quite commonly used. And when price is in a trend, so in this case a downtrend, it's very common that you can draw a fib from from the high to the low, and price has a pretty high chance of reversing in this level, in this golden zone, which it has done so far. So we had this. So there was so many confluences in our favor here. We also had the RSI that wasn't perfect, it didn't come all the way up to an overbought level, but it was high enough to give me some confidence in this as well. We've also got the moving averages that are coming down. Now, take profit wise, we could have a take profit here at the 0 level, so back at the previous lows. However, in this trend, I feel like we could go lower. So we could use the fib extension, and this is what the negative 618 is commonly used for. It's commonly used as a take profit level. However, I don't want to do that. I like my take profit right here. And the reason is because we've got this previous support. So we've got this wick down here that stayed and respected this previous support right there. And that's what I want to bank on. That's where my target is, and that's what I'm looking to catch. So I don't want to be greedy and try and get this extension. I'm happy to just cut out for a 1 to 2, and that's good. Stop loss, you can be quite aggressive with the stops. You could put it just above the golden zone, so something like this. However, I'm a very conservative trader. I have no interest in going for 1 to 5s, 1 to 6, 1 to 10s. I'm happy with 1 to 2 and get out. So that's what this is. So you can see my stop is just above the fib high and the market high. So it just allows some room if price wants to come up a bit higher and test this 50 moving average, for example, that's no problem. So that's the 4-hour analysis. We also have the H1 analysis here. So the H1 is where I actually executed the trade. So we had all the same reasons. However, on here, we did have the RSI come up to overbought. We saw some nice bearish momentum. And then these wicks here. So some price exhaustion at this gap and at the support and at the fib. Price is also still underneath the 200 moving average, which is great. So this is a combination of the Echo model that I've taught before on this channel, and I teach it quite in depth in the Discord as well. So you can see it's a very, very strong trade. Technically, it's basically all perfect in my book. So let's go and find something else. So let's have a look at another pair, and we can cover that one as well. So let's have a look at AUD USD. Let's just go back, so we're in a bit of a range here. Let's go back and find a trend on the H4. So here, we've got this. So what do we see here? We've got quite a nice move to the downside. So you can see price here, we come down, we saw some consolidation, broke lower, again pulled back, saw some consolidation, went lower, pulled back, saw some consolidation, and pulled lower. So it's quite a nice trend. So I'm sure there is some trades in here. So let's start here. So we don't want to try and trade right here because we don't know if price can continue up or if it's going. So for example, here, we don't want to take some shorts because this could just be a pullback before we head higher. So what we want to do is make sure that price is sort of breaking past the previous lows, which is here and here. So you can see prices, this is where price sort of stalled and had that range, and then we've broken lower. So all we need to do is draw our levels. So we can draw a fib, and then we can draw our support here. And you can kind of see that this isn't a perfect level actually, but it will do. So we've got this wick that respected it, another one here, and we also have the 50%. We've got the 200 moving average right here. So we would wait for price to hit, which it did here. So it hit the 50% pullback. Stop loss in this case could be here. We could target a 1 to 2. So, well, just under a 1 to 2. And this would have been hit quite quickly. And this would be, obviously, of course, if you put a pending order at the 0.5 level, then that would have been great. If not, then you may have had a slightly lower chance or lower trade, something like this. But you can see how simple this really can be. So it's just drawing support resistance and checking if it aligns with the Fibonacci. Now, of course, you'd want to go back onto the daily and make sure the daily is in the same trend. So let's just remove the drawings and start again. So here you can see we've got another move to this downside. So let's see what happens with price here. So we've got this level of resistance. However, the moving averages are very flat, so we've got no interest in trading that really. We do have a nice support here. So what you could do is trade this. So let's see if our fib would work from this high to this low. It doesn't line up too great, so we wouldn't take that trade. And now we're starting to head back to the upside. So again, let's see if we can get this pullback. So we've drawn it from this low to this high, and we can see that price is heading back up. We've broken the previous highs here. So what we'd like to do is enter, and you can see here we had a really nice touch of this 50% pullback and a bullish continuation. So in a real trade, what you would want to do is wait for this bullish engulfer here. And that confirms the momentum of the market. That confirms that we are in buys and the market wants to head higher. So in this case, we wouldn't go for the extension, just like we're doing with the EUR CHF trade. We wouldn't go for the extension. We'd want to go sort of in the middle ground back up to this resistance. And you can see this trade actually worked out really, really well. So it can be quite a slow and repetitive thing, but you know, repetitive in trading is often a good thing if you can be consistent and manage your risk well. So it's very, very simple. So repeat it one more time. We've got the moving averages for the trend. We've got a Fibonacci and we've got support and resistance, and that's it. And you can use the RSI as well to sort of gauge the entry on the hourly and make sure you're not buying and selling at the wrong times. But yeah, it's very, very good. It's very powerful, and we use this inside the Discord. So guys, don't forget, we do have a 3-day free trial in the Discord if you would like to try it. You've got no strings attached. You get access to everything. You get this trade ideas, you get webinars, bank reports, community chat, everything. If you don't like it, you can cancel and leave at any time. Again, for the first 3 days, no strings attached at all. You pay absolutely nothing. So I will hope to see you in the Discord. If you found some value in this video, please leave a like. And if you've got questions, leave a comment. And I will see you guys very soon. Thank you for watching.